What's good, YouTube? Welcome back to the channel. It's your boy Keno Brown, and I got what you need this week, man. I know what you need. I know it's gonna get you through the week. I got the sauce packet. I got the hot sauce in the bag. I got the salt that you need, the extra seasoning for the chicken when it's not flavored. I got the ingredients to put it together, you know what I mean? I got what you need. In this video, we're gonna give it to you back fresh again. Another back testing video. Let's go. Come on. Let's go. Nah, let's stop running. But another back testing video, fresh out of the blues for you, where we're gonna go over my strategy. We're gonna go over like the week of me just back testing, showing you guys how to back test in general. Just, many people don't know how to back test. They want a video on know how to back test. This is it. I got you. Let's get right into the video. Let's go. Okay, let's get into it, ladies and gentlemen. I want to start from the week of the 17th to the 21st. We're going to do that back testing session, but let's get right into it. So first things first, I always want to start from the 1 hour time frame and then work my way down to the 15, and then I look for entries on the 1 minute. On the 1 hour time frame, I want to identify structure. Structure is the cornerstone, the backbone, the everything of my trading strategy. It's literally the fundamental basics of how I trade, or how I believe traders should trade in the markets. Honestly, if you understand structure should be at like the basic level of understanding markets and understanding how to analyze markets. Then candlesticks, and then you have your different entry models or your different after that. But definitely structure comes primarily first for me. So what is structure? Let's draw it real quick. I do this analysis a couple of times a week, I'm not gonna lie to you. Bring this up a little bit. Something that look like this, right? And then give another structure, something that looks like, I'm gonna change the color of this so we can have a distinction of what it looks like. Boom. So on the left, we got bearish structure. How do we know it's bearish structure? Because price makes a low, makes a higher low, a lower low, a higher low, a lower low, higher low, lower low. It's trending downwards. You can see the trend is downwards. That's what makes this a bearish structure. This is, on this side, we got a bullish structure. We started with the high, created a lower high, created a higher high. This high is higher than this high. A higher, what is this? A lower high. Then we create a higher high. Then we create another lower high. Then we create another higher high. The trend is primarily going up, right? Obviously, when you look at the chart is never going to be this perfectly sexy, where it's just the trend is just perfect and it never breaks a low and never breaks a high. But as long as you understand the basic fundamentals of what structure looks like, you'll be able to mark it off on the charts. But this is what structure, like a downtrend, looks like. Low highs, low lows, low highs, lower lows, lower highs, low lows. Uptrend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So primarily that's what I look for on the charts. If you look at the charts right now, we're gonna draw it from the top, right? We got this. Let's start off up here. We got a high, we got a low, we got a high, we got a low, we got a high. I would say this is the high right there, but high, low, high, low, high, low, high. Obviously, I'm not drawing off perfectly. Like if I was supposed to draw it off perfectly, there'll be a little bit more detail. But for right now, this is good enough to get the point across. So this looks exactly like this. A downtrend. You can see prices primarily moving downwards, creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Oh, you get the point, right? So we're right now currently we're in a downtrend, right? After I identified my trend, I know where direction we're primarily going in. Not saying just because we're in a downtrend, we're definitely going to sell in the market, or for that day we're primarily selling. Not sure. That's not a definite guarantee fact. But at least I know what trend we're in, right? Then I like to mark off my areas of interest. Mark off my areas of interest based on the wick. I'm not going to get too deep into that right now. But basically, it's just the wicks. I got another one right here. I have, I don't see anything else that I'd be like, I really need to mark off right now. Then I drop down to the 15-minute time frame. I do the exact same thing on the 15-minute time frame. So go to the 15-minute time frame, identify structure, identify my areas of interest, mark them off, drop down to the 1 minute. So my areas of interest right now that I see on the 15-minute time frame, they're like right here. We're gonna make it in different colors so we can know which time frame structure we're in currently. And then we have these highs up here. See, this is the last high that it created on the 15-minute time frame. But yeah, primarily this is what it looks like. And then from here, I drop down to the 1 minute. And on the 1 minute charts, I'm looking for 9:30 to show me what does it want to do. I already have a bias of sales, right? Because of 9:30, I have a bias, not because of the high time frame, which is the 1 hour 15. So the bias is already technically the 1 hour right now. We can see the trend is going downtrend. On the 15-minute time frame, if you look at it, making highs, lows, made a new high, made a new low, made a new high, low, high, low, and then we're somewhere here. On the 15-minute time frame, we're bullish. So 1 hour bearish, 15-minute bullish, 1 minute not sure, right? But right now we can see we're bullish, right? Definitely bullish. This is right before 9:30. Then I drop down to the 1 minute time frame. Then I see what's going on with the 9:30 open. So the 15-minute right now is bullish. So that means I can definitely still catch a scalp. I'm a scalper, so I can still catch a scalp on the 15-minute time frame to go longs, or I can go with the daily trend, which is the 1 hour time frame, and go shorts. It just depends. So boom, let's go into 9:30. What does 9:30 look like? Boom. What is 9:30 doing? Boom, 9:30, 9:31, 9:32 started pushing crazy, right? So I'm like, all right, cool. By the structure on the 15-minute time frame, we made a high, then we created new lows, then we created new highs. So I'm like, all right, cool. Let's wait for a pullback to take it high again, because that's what it's already doing. Especially on the 15-minute, we can see that it's broken structure. Maybe on the 1 hour too, we can see that structure has been broken. Yep, on the 1 hour too, we can see that structure has been broken as well. So we can count that as a break of structure, and then we're probably going up now. So now I'm waiting for a pullback. Boom, we got that. We got what you call it? We got 9:30 tap this area. So you could take sales from right here, but this would be very risky. So I could take a sell like this, look to get tapped in. When it retraces, boom, tap me in right here. It would have tapped me in. TP2 would have been hit. That's a good trade. Good trade. Granted, it's a great trade. Granted, again. But we can see that 15-minute time frame it was going in an uptrend since the day started, or since yesterday's close. And then on a 1 hour time frame, we broke structure. So now it looks like we're going bearish. We're going bullish. Excuse me. We're going bullish. So I'll be looking for a pullback like this, something like that. Then I could be like, boom. I could take this trade and pulls back in this area to take it long if it ever does come back. See if it comes back. There it goes. I did take this trade. I remember this trade, and it stopped me out. I remember taking this trade, and it did stop me out, which is tragic. It's tough. It is what it is. So, although it pulled back, if you look at the last area of interest, or the last area that it had a low. So we had a low, we had a high, we had a low, we had a high. The last low is all the way down here. For it to come break structure, it's all the way down here. So I can still look for primarily a bullish entry. Although it did just stop me out on that first trade. It's okay. Like, you will get stopped out sometimes. Like, losses is a part of the game. So boom. This is the second trade idea. Let me take this off. Second trade idea. Let's see if it comes back and tap me in. Boom. Tap me in. TP1 hit. Break even. TP2. Let's see if we get TP2. TP2 hit. Are we going to get TP3? No. TP3, no. Yeah, we eventually got TP3, but TP2 was hit. So if you were, say if you was risking $250, $500 first trade, and then you risk $250 or $500 on the next trade, if you went for a 2-to-1, you'll still be up in profits, right? This trade was more risky because it's in an area that I call the dead zone. So this gray zone, let me get this off real quick. This gray zone, I call this gray zone the dead zone, right? It's very risky to take trades up in here. I usually wait for price to get back into an area of interest before I look for the reversal, or I look to continue to take in a direction. But as you've seen, we still got the trade idea, 1L, 1W, but with the risk to reward, you still made money. So let's go to the next day. Fast forward to the next day. 4, 5, 1, 2, 3, 4, 5. So on a 1 hour time frame, let's see if there's anything I would like to erase. Let me get rid of that. Get rid of this. Get rid of this. This. I usually like to clean up my charts every day. I'm not gonna lie, 'cause I want to have fresh eyes on my charts every single day. I want to make sure that I'm reanalyzing. I'm not going based off of yesterday's data to make my inference on what I think today can do because of what yesterday did. Like, that makes no sense. I want to reanalyze what today is doing to make decisions on what I believe that today can do. So I always reanalyze, remark up my charts every single day, really. Right now, is there anything else that I would like to draw up? Maybe this. I'll just put a line here. And I'll put one more area of interest right here, just in case. Right? That's pretty much it I see on the 1 hour time frame. Let's drop down to the 15-minute time frame. As you can still see, though, we're looking bullish, though. We're looking bullish on the 1 hour time frame. Let's go back to the 1 hour time frame. We're looking bullish, Well, how do we know it's in the bullish market? Let me explain again. We had this low, right? Then we created a high. How do we know we created a high? Because we broke the last high. Boom. Broke structure. Came down, created a low. Broke structure again. Right? Boom. So now we're in an uptrend. We're currently in a pullback. Can it pull back here and then continue going along? Yeah, sure. Or it can come back down here. It could go lower and then push long. Or it could just start dropping off and then create structure to the downside. I don't know what it's going to do. Have no idea. But I just know that right now, currently on the 1 hour time frame, we're bullish. Let's look at the 15-minute time frame. 15-minute time frame, we're bearish currently. Let's go from the high. Boom, from the high. We got this high, made a low. Then we made a high. Then we made a low. Then we made a high. Then we made a low. So we know we're back we're back bearish again on the 15-minute time frame. So the 1 hour and the 15-minute is not lining up again. But on the 1 hour time frame, we already broke structure. 15-minute time frame, we still haven't broken structure. If we're being realistically, we haven't broken structure. Let me draw out structure for you again. I like to draw out these things so we can talk about it. Boom, we have structure. Got a high, low, high, low, high, low, high, low. By the way, this is not perfect at all. The next structure point is down here. The next structure point right here is down there, where I would be like, I would try, if it price comes down and break these lows, then I'll be like, okay, it looks like it's going bearish, at least into like for the 15-minute time frame. It looks like it's definitely going bearish. But right now it just looks like it's having a pullback, because you have to understand that there's structure within every time frame. So on the 1 hour, although it doesn't look like it's bearish right now, it looks bullish, it can have a pullback on the 5-minute time frame that looks like a bearish structure. So let's go fast forward right into 9:30. Boom, this is right before 9:30. Let's drop down to the 1-minute time frame. Let's see. Let me draw what I'm drawing on the 15-minute time frame so I can. So on the 15-minute time frame, this is the only area of interest that I have that I want to draw out. Boom, we know that's there. Everything else, 1 hour time frame, we're not worried. Back on the 15, we see what 15-minute time frame, it looked like it was consolidating. It went longs, started bearishing. So we're not really judging structure right now based off the 15-minute time frame. But we'll look at see what 9:30 wants to do. 9:30 drops. Okay. 9:30 look like it's dropping. Okay. Remember, again, we have the lows down here. We have the lows at 41,936. If price comes down there and break low officially, I'll be like, okay, officially, we could start looking for sells. For sure. But right now, I still think we're in a possible, just a small pullback before we go long. Where would I look for a buy? Boom. My buy opportunity just appeared. I would take this buy right here. Waiting for price to pull back, tap me in, and I'm in that John. Oh my God. I'm in that John right here. Let's see if it pulls back. Pull back, tap me in, stop loss hit. Cool. It's cool. Price is continuing to trend downwards. That's what happens sometimes. It happens. As I said, we take losses in the market. That's just what happens. Losses are inevitable. Just about the risk to reward. Let's see if it continues to go lower. We're back in that area of interest. This is the nice bullish engulfing candle. This will probably be my last trade idea. Still try to take it buys. I would have got tapped in right here at 952. It would have been close to TP1, but not necessarily TP1. Stop loss hit again. That's tough. Let's fast forward it then. What did it want to do? This is tough price action. You can see this is tough. Look at that. Sideways movement. Sideways movement. It started making bullish structure, came back, dropped. This is tough price action. Days like this, it's annoying. I'm not gonna lie. Days like this is super hard to trade because price action just doesn't know where it wants to go. You can see that it started making bearish structure. Boom. Stop me out. Broke up, make a bullish structure. Boom. Came back, made a new low. See, it started dropping again. Maybe the play the whole time was sells, but on the 1 hour time frame, it still looked like it was longs. And it never broke that 15-minute low that I was looking for. So I was still primarily bullish, especially seeing that the 1 hour time frame was bullish. So let's go to the next day. This day, we'll call it the L. 2 L's on this day. Tough price action. Can't lie. Tough to trade price action that just it consolidates and it does nothing for a very long time. Let me remove all of the drawings so I can reanalyze. After taking some like a depressing trade like that and you lose, you gotta reanalyze. You gotta be like, man, I was definitely wrong yesterday. Price action was not trying to go long. But you can still see, like, look at what happened from 9:30. It just dropped and it came back, and it's like it really didn't do nothing. It really didn't even break structure for real. Not on a 1 hour time frame, it didn't break structure, but high time frame, 1 hour structure, 4 hour structure is still bearish. So very confusing day. We got this low right here. I don't think there's anything else that I want to draw up. Let's go to the 15-minute time frame. 15-minute time frame. You can see that we started dropping. We create a low, high, low, high, low, high, low, high, bear structure, complete bear structure. But look, it look like we're creating bullish structure, but right now we're still bearish. We're definitely still bearish. So I was saying, based on yesterday, it looks still like it's bearish on the 15-minute time frame. So I'm going to draw this area of interest on the 15-minute time frame. See if we can get a play off of that. Is there anything else that I believe that is important? Maybe up here. That's pretty much it. There's nothing much that I see that is important. So this is right before 9:30. Boom, that's the 9:15 candle close. We're looking at it build up momentum. Look like it wants to take off going into 9:30. Is that what it does? I'm not sure. I don't remember. Wick, ill. Started to drop. We're gonna drop. Reverse. Yeah, it's crazy. I would probably take something like this. First trade idea, boom. Looking to try to take it long. Damn, it looked like it's gone now. Is it gonna come back? Tap me in. Was close. Tap me in at 9:37. We gotta tap in at 9:37. Let's see. TP1 hit right here at 9:40. 3 minutes later, break even. Really, it would have break me even already. So that would have been a break even trade. Look at that. Came back to the damn break even and took off. Ew, my God. TP2 hit. That's tragic. If you wanted to add on to this trade, maybe because I missed this trade, or I would have been broken even. Right here, could have took something like this. Stop loss would be stupid tight. So would I take this trade? Probably not. It just depends. It would have tapped me in right here at 9:53, and then hit TP2. TP2 would have been hit, but let's see how much I would be risking on this trade. 24 pips. I'm definitely going for TP3. So let's see if we can get TP3, maybe even TP4. Oh man, look at that. I would have been stop break even again. 2 break evens. Crazy. I wouldn't have taken TP2 on this one. I'm not gonna lie. I wouldn't have taken TP2. So it would have been a break even day. So Monday was a win day. Tuesday was a L day. Wednesday break even day. Tough. It is what it is. Feel me? Market conditions tough. It really is tough. I can't lie to you, man. Let's go to the next day. Matter of fact, let's see how much time we have in this day. 10:17. It could probably still go buys though. Yeah, I still think it would want to go buys. Would I take this trade? I'm gonna be honest. I'm gonna say no, but I'm gonna still mark this out. I'd probably take something like this. It closed. I'm gonna wait for it to come back and tap me in. Does it come back? It does come back, but it comes back late in the day. It comes back at 10:46. Then it goes to stop loss. Does it? That's disgusting. Yeah, it does go to stop loss eventually. That's how it took my 2 trades, 2 L's, and just not 2 L's, 2 break evens, walk away. It is what it is. Let's go to the next day. So this is Wednesday. Wednesday is the 19th. Let's go to the 20th. Let's fast forward the clock to the 20th. 3, 4, 5. Oh man, that one candle was not supposed to be. Let me reanalyze again. So for those who think, you win all the time, it's impossible for you to win all the time, bro. If somebody tells you they win all the time, their like hit rate is like 100 or 95, or it's probably cap, bro. I'm telling you. Like, if you're new to trading and somebody tells you they got a 95% hit rate, like, you need to run. It's probably not true. The market's always changing. It's forever changing. So there's no way that your strategy or the way you trade works every time through every market conditions and you never lose. It just doesn't work like that. Just doesn't. I know people would like to assume that it should work like that. Like, once you figured out a holy grail strategy, you're on for life and you should never lose again. It just doesn't work like that, big dog. This is probably the only field that you will be in where that doesn't work. Like, you can't not lose. You have to lose. You have to lose in trading. And there's going to be times that you feel like you don't know what you're doing, or your strategy sucks, or your strategy don't work, or maybe it does. That's why you have to backtest. I have my journal TradeZeller open right now, but that's why you have to journal and stuff like that. That's why you have to keep learning from yourself, because the market is going to change, and you got to see how your strategy or your edge changes towards the market conditions. So right now we look like we're still bullish. I would say we're bullish right now. Let me draw it out so you guys can see. Boom, we got the low, we got the high, we got the low, we got the high, we got the low, we got the high, we got the low. We started expanding higher. So this is bullish structure primarily. So if price comes down and break the lows down here, then I'll be like, all right, it looks like we broke structure. We're probably going to continue going shorts. That's where I would be like, definitely we're going shorts. Oh, let's fast forward real quick to 9:30. Drop down to the 1 minute time frame. Oh man, looks like it's dropping off right now. Let's see. 9:30 had a big push. Nice push on off of 9:30. You could have took this trade, but never hit that zone, right? Never completely captured that zone. But you could have took this trade right here. You could see that, as I said, 9:30 had a big engulfing candle, or 9:32 big engulfing candle. It looks like it broke structure. You could have took this trade. Would I have taken this trade? Probably not. TP1 would have been hit. Would it? Nope. Oh, TP1 would have been hit. Then you could have taken an add-on trade right here. This is where probably my first official entry would have been right here. Price would have tapped me in at 9:51. TP1 hit by 9:52. 1 minute? Damn. 9:51 we entered. 9:52 TP1. TP2, let's see if we get TP2. TP2 and TP3. That's crazy. So you would have got TP2 on the first trade idea, and TP3, because they're really like close to each other. Even if you wanted to take TP2 and half, it doesn't matter. It's been an add-on into the trade that you already was in, which you're stacking the trades in your in your direction of probability, where you can increase the amount of money that you make on the trade. So we could call this an easy dub day. I wouldn't even take another trade, seeing that markets is just going straight in the direction that I would want it to. Look at that. Boom. Oh my God. Look how far it went. Wow. Went to TP4 in the original trade. TP like 7 on the second trade. Like, this one went nuts. This one went absolutely nuts. Yeah, this day went nuts. W, smack W on this trade. I'm sure after this day you would have made back all of the losses from Tuesday. So Monday was a win, Tuesday was a loss, Wednesday was a break-even day, Thursday smash W. You would have made all of that back from Tuesday, which probably would have been a small L anyway. Let's go back to the 1 hour charts. Let's go skip to Friday. 2, 3, 4, 5, fifth candle. Let's reanalyze. Remove all the joins and let's reanalyze again. Okay. What structure do we look like we're in right now? I would say bullish, but we just broke structure. Like, look, bullish, boom. We got the low, we got the high, we got the low. We got the high, we got the low. We get the high, we get the low. And then price came here, and then what happened? We broke structure. Oh, so primarily now, seeing that price broke structure on the 1 hour time frame, let's look at the 15-minute time frame, see if price, like if the candles or the structure is correlating with what we're seeing with the 1 hour time frame. And this Friday could be an easy day. Definitely could be an easy day. Hmm. 15-minute time frame. 15-minute time frame looks bearish, bro. Looks bearish. Yeah, looks bearish. I would draw this area out right here. 15-minute time frame. Yeah, looks bearish. I would draw this area out. There's a lot of areas that's right in the same spot. I'm gonna just draw a line there, so I don't be drawing too much. Line right there, line right there. I'm gonna make those lines orange so they can correlate with the. Okay. All right, we're dropping. Have big significant drops. Let's skip to 930. Ooh, 930 dropped again. Wow, 930 is dropping. Well, it even hit 930 and it's already dropping like a rock. So right now we see this pullback at 929. You see 930 open. I'll be looking for sells still. Ooh, look at that drop from 931. Look at that. Definitely taking this sell right here. What? Everything's lining up. 1 hour is dropping, 15 minutes dropping, 1 minute's dropping. Sell. Sell. Everything is in alignment. This is where you would probably go bigger on the trade too. Like, where's more? Let's see if I do get tapped in. I want to get tapped in right here at 41,879. Let's see. Does it pull back? Ooh, you would be dread. Like, stop loss would be hit. Almost hit. Does it hit? Oh, look at that heart attack I would have had. Look how close it was to stop loss. Oh my god. Let's mark that off. That's a heart attack. That's like 10 points away from stop loss. Whew. Let's see. Hopefully it doesn't go with stop loss. Especially now you're risking more on this trade. I would risk more on this trade. What the hell just happened? Okay. My fault. It looks like an L. Come on. That's an L. Salute. You can see that it's what they call that flag, bullish bears, whatever flag. Looks like an L. What the heck? What the heck? Oh, snap. Let's fast forward a little faster. Wow, TP1 hit. Stop, break even. Boom. I probably would have been stopped out. Maybe not. Depending on where I would have put my stop loss, like, because I would have been break even by now. Especially after that heart attack. I got in at 9:33 and then by 9:53, so 20 minutes straight, just boom. heart attack. Crazy work. Yeah, break even. It's tough. What? It broke me even. It just dropped. Came back. Damn, this is disgusting. If Fridays for you, I'm telling you, Fridays for you. That's a Friday for you. Yeah, that's nasty. That's nasty. I can't even lie. That's nasty. I wouldn't even know what to do with this. You could have took this trade idea. I'm seeing this trade idea now. Tapped you in. TP2 would have been here on this one. If you was still looking for the opportunity, you would have seen that opportunity to take that sell. So you could have hit TP2 on this one. It still would have been the W day. One break even, one W. Tough day. But yeah, as you can see, strategy works. In different market conditions, it works better. Different market conditions, it works worse. Right? But Monday, W, we had one break even, one W. Tuesday, 2 L's. Wednesday, 2 break evens. Thursday, 2 W's. Friday, 1 break even, 1 W. So that's a W week. Still made money, right? And you was taking 2 trades max per day. So that's 10 trades a week. It's not bad. Some people take 20 trades a day, 30 trades a day. Crazy. But anyway, that's my video, y'all. Peace out.